Nigeria's gross domestic product maintains growth, rises by 2.38%. The Central Bank of Nigeria relaxes time limit for commercial banks to absorb impediments from implementation of the rule on bad loans. Nigerian stocks break gaining streak as global stocks rise with hope that US and China might be able to resolve their trade dispute. I am Amina Nujaim and this is Business Express, reaching you on the network service of the Nigerian Television Authority. Welcome. Just yesterday, the National Bureau of Statistics published the fourth quarter 2018 GDP figures as well as the annual numbers which superseded which was recorded in the year 2017. This edition of Business Express will be looking at the implications across the sectors of the economy. But first, let's take a breakdown of the figures by Leah Katung Babatunde.
Nigeria's gross domestic product GDP inched up by 2.38% as released by the National Bureau of Statistics. The fourth quarter growth performance implies that real GDP grew at an annual rate of 1.93% in 2018 compared to 0.82% recorded in 2017. The report indicates an increase of 0.27 percentage points when compared through the fourth quarter of 2017. Just as it was in the first two quarters, the non-oil sector remained the focal point for economic expansion, growing 2.7% year-on-year in the fourth quarter of 2018 from 2.3% year-on-year in the third quarter of 2018. The numbers revealed improvements across all the subsectors, with services and agriculture leading the pack. In the agri space, production activities improved by 2.5% in the fourth quarter of 2018, higher than Q3 2018 of 1.9%. The manufacturing sector grew by 2.4% year-on-year due to expansion in food production, oil refining and textile production. Growth in oil refining, however, came as a surprise as it went up by 33.6% after posting 2 quarters of consecutive contraction.
Meanwhile, reactions have continued to trail the release of the figures by the NBS. The Office of the Vice President says GDP figures are encouraging in several respects as it shows an appreciable improvement in the growth performance of the economy. A statement by Senior Special Assistant to the President on Media and Publicity, Office of the Vice President Laolu Akonde, says notably the growth recorded in the fourth quarter of 2018 was very encouraging. In annual terms, the growth rate more than doubled in 2018, again reflecting the strong momentum of growth. The statement added that with the maintenance of this trend, the economic diversification objectives of the Economic Recovery and Growth Plan are well on their way to being met. The presidency says, indeed, the economy remains well on course to grow by 3% in 2019 as estimated in the medium-term expenditure framework. Similarly, Minister of Budget and National Planning Senator Udo Udoma has expressed delight at the fourth quarter 2018 numbers just released by the NBS. A statement from the Office of the Minister says he was particularly encouraged by the fact that the growth was largely driven by non-oil sector, which grew by 2.70% in the quarter, posting a growth of 2% for full year 2018, representing the strongest growth in non-oil GDP since the fourth quarter of 2015. Senator Udoma said this results reflect the Buhari administration's continued implementation of the targeted policies, programs and projects across various MDAs and other sectors of the economy as set out in the ERGP. The minister stated that these indices show an economy that is on the mend and on the path of recovery to sustained growth. On that note, I now hand you over to Bolede Salami in our network center for a reaction of the state of the economy.
Thank you, Amina, and welcome to Lagos. I have with me in the studio Dr. Boniface Cheze. Dr. Boniface joins me to take a look at the impact of monetary policy on the economy as we count down to the general election. He is a banker with a lot of experience at the Nation Apex Bank. You're welcome to Business Express, Dr. Cheze.
Thank you very much for having me on. Yes.
Would you say the monetary policies have helped in any way to shape the economy?
Well, I should say so. I think that what is obvious is that if you look at the results speak for themselves. You know, it's been topsy-turvy in the sense that if you take a span, if you take when this governor came on board. Governor came on board June 3rd. Just a year, 2014, a year before, almost a year before this administration. And when he came on board, there were lots of challenges. The oil market was getting soft, you know, so we were already beginning to have issues. And as we went down the line, it got worse. The results were, you know, disappearing, you know, before our eyes, and so there were challenges. And this government came on board, and there were some uncertainties about what the government was going to do next. And unfortunately, this uncertainty was not resolved quickly in the sense that it took this government some time, you know, to settle down, longer than should have been expected. And as that was happening, you know, the international investors, international overseas community, you know, the risk factor, the risk environment in the economy, you know, got worsened. And so gradually we found ourselves in a recession. And they struggled. The recession didn't last too long. We got to recession, I think, in 2014. And by 2016, we were out of the recession. And if you take some of the key indices, monetary indices, if you take exchange rate, it's been quite exciting. It's been quite it's been tough, you know, for the regulators in the sense that
the sustainability of FX.
FX, yeah, that's what I was going to say. In the sense that the rates went from 150 something to 170, then to 300, and it was going to 500, and so on. And then you know, they got assisted also. Nigeria helped the central bank because they are being called names. They are going to be crucified. And then so they are able to solve this problem. And then we have stability. So we have now, even as much as say we have two rates. You know, so you have a rate by window 305. You have another window which is a importer-exporter window, which is about 360. We expect that going forward, and these windows would emerge. But we have some stability, which is good enough. Nice.
Okay, sir, would you say the unconventional monetary policy played any role in the success story of Nigeria economic management?
Unconventional in the sense that, you know, if you look at the environment, if you take something, for instance, like monetary policy rate. Yes. Monetary policy rate has been at 40% for about 2 years. So that's unusual. First of all, the rates are high. The rates are on the high side. Because, like I've been known to have said, you know, the rates are factor cost. And but then also, if you look at the external sector, you know, the rates of returns and so on will tend to impact on your competitiveness. And since the central bank, you know, was more or less concerned about managing the exchange rate, because this is an economy where the exchange rate is more important to us, you know, in terms of our immediate fortunes than the interest rates. They were not concerned with that, and so they concentrated on that, and they were very careful. They were careful about, you know, easing the interest rates, because if you did that, then what you're saying is that you're going to make borrowing, you know, easier, cheaper, and so on and so forth. You want to stimulate the economy. But then when you find an economy that you need to maintain, you know, that a tight stance, tight, you know, you want to keep it. But they've kept it for too long, and we hope that going forward that the rates will begin to respond. We expect that after the elections, that the rates will begin to come down.
Okay, so just yesterday, the Nigeria Bureau of Statistics came out with the fourth quarter figure where we had an improvement by 2.38%, and we saw that the non-energy sector drove this growth What would be your response to this?
Well, I think that's the way to go. That's sharing news in the sense that at 2.3, yes, we're not quite there, but at least we're moving, you know, and the way it should be. But if you look at this, you see that the rates are, you know, it's incremental. It's not something that you would expect, you know, to have a leapfrog, you know. So I listened to some comments, you know, some on the campaign train, and you have people saying that we're going to unleash 10% GDP growth on the economy and so on and so forth. Now, for me, that's so it says that talk is cheap,
yeah,
you know, because there's no way you're going to be able to do that. You know, I will swear anything that within the next 4 years, we'll not be able to do more than, if we maintain steady progress, we'll not be able to do anything beyond 6-7%, you know, growth. And that is assuming that we don't have any disruptions. You know, if you come and things have been disrupted and you want to float the naira and you want to experiment and you want to play and show that, you know, there's a new kid on the block and so on, then it might even be much worse, you know, because then you might find that if, for instance, we liberalize the naira today, you know, what's going to happen is that there's going to be some instability in that sector, and it's going to take us some time again to stabilize. And the rates are going to worsen. The economy is going to be badly affected, and so as any for us, we're very, very cautious. So as we speak, we're at 10%. We're going to, you know, adopt, if you like, stimulating monetary policy. We're going to allow the deficit to balloon and so on. It has its consequences in inflation, and so on and so forth.
Like over the years, this country has placed most of its spending on just one source, that's from oil. But as you rightly said, it's a cheering news that now this government is focusing on the non-oil sector. Going forward, would you say more things still needed to be done in that sector?
You know, when you said that, I think that's the way to go. You know, because since 1986, when we introduced the Structural Adjustment Program, essentially that program, the thrust of that program was to diversify the economic base of this country, to include market forces in to optimize its allocative efficiency. But mainly wanted to diversify, to remove this vulnerability which the country suffers so from going from this dominance, except over reliance on the earnings from oil. And so that has been work in progress. And so it's going this way. Where the non-oil sector is contributing about 2%. Yeah. We're told, you know, and then oil sector is about 1.2.
Yes, sir.
And so that extent, that's the way to go, you know, and that has been the reality. If you look at GDP also, you find that the non-oil sector contributes what oil contributes to GDP is probably just about 10%. And so the rest of the contribution you get is just foreign exchange, that we are that dependent on the oil sector.
Okay, so lastly, let's say, what's your projection going forward? Do you still see the Nigerian economy going up?
Well, I think that from what's happening now, you know, the trend has been there, the momentum, you know, it's regarding momentum. Like I said, the only thing that is the only concern we're going to have is that we have elections, you know, around the corner, and these elections are bound to, you know, to destabilize things. And what is the need for us to maintain the stability? If we can maintain the stability and then maintain this trend, then certainly by next time around, again, the GDP growth rate is going to increase.
Thank you so much, Doctor. I've been speaking with Dr. Boniface Cheze, and we've take a look at the monetary policies on the economy. Back to you, Amina, in Abuja for the continuation of Business Express.
Thank you, Bolade. David Nabena, a senior economist, joins us here in Abuja to discuss further on the figures and sectorial performances. Welcome to Business Express.
Thanks for having me.
Let's have this straight. How important is this increase to the Nigerian economy and the image of the country?
No, I think the GDP it's an important factor to well, it's essentially an engine room for development in any country, and it's not a sufficient condition, but a necessary condition to ensure that a country is developed. But if we look at the GDP figures that have come in recently, I think that's positive news. I think we should focus on the good thing for now. I think one of the most important drawbacks that we can get from it is that we've sustained positive growth, at least in the last 4 quarters, and we didn't record a double dip, and we're into sustained growth. I think that's very important, and we should commend ourselves for that.
Okay, talking about the positives, what fiscal policies do you think helped achieve this increase?
I think the primary driver so far would be the increase in the expenditure. You know, although we're underspending far less than what sub-Saharan African countries will spend. We're spending around 11% of our GDP And if you look at the sub-Saharan African average, it's around 21%. We should really be spending more. But I think most of the growth in GDP has been through, increased public investments.
Looking at the agricultural sector, it contributed over 23% in terms of growth. What do you think was done right, and what more needs to be done?
I think if you look generally on the outlook of the federal government on the agricultural sector development, we've seen a lot of focus on the Anchor Borrows program. We've seen a lot of focus on fertilizer, and that's good for us. But I think we're still not getting the best that we can get from the sector. In the last 3 years, if we look at the growth in agri growth in agri sector share of GDP is been declining. In 2016, it was around 4.1%. It's declined to 3.4%, and in 2018, it was around 2.1%. So, although we're recording growth has been slowing in the last 3 years. We could say one of the reasons for that would be insecurity, but of course there are other insecure factors that have led to decrease in growth in the agricultural sector. So we're still far from where we need to get to, actually.
Okay, well, what do you think should be done?
Well, it's important that when we look at the agricultural sector, we look at the value chain. It's not just about planting crops, it's not about harvesting, but it's about ensuring that your harvests get to consumers, ensuring that there are storage facilities, ensuring that there's roads that will take your goods from point A to point B. It's important to ensure that you can convert, your crops from produce to intermediary products to products that you can store and sell in the market. So I think the whole value chain is important that the government focuses on that. Security has led to a lot of drawbacks in the sector in the last couple of years. But I think the government should look at the holistic picture and look at agri, not just in terms of farmers getting their produce out of the farm, but also ensuring that those produce get to consumers. And there's a lot of subsistence farming still going on in the system. We need a lot of mechanized farming, we need a lot of inputs, we need a lot of technology, and there are a lot of experiences from other countries that we can draw from.
Okay, another sector that did very well was the services, one of the best performing, and it's been going on for a while. Yeah. What do you think is responsible for this?
Well, I think if we look at transport services, if we look at ICT, if we look at telecommunications, those sectors have been driving our GDP in the last decade and a half, and you would see that services account for over 53% of our GDP. A lot of the reforms that were put since the early 2000s are taking shape and are still driving our economy. But I think there are still challenges that we need to address, because our GDP in the last decade and a half has been driven by services, and you can see poverty has been rising. Although our GDP has been improving, unemployment has also been rising. So it will tell us that the service sector hasn't really provided the jobs that we need in the economy. So if we look at other sectors like the industrial sector, I think that's where we...
Let me come with my next question. Is in the same line of thinking. The manufacturing sector shows significant increase with, say, the ease of doing business and other policies that was put in place by the Buhari administration. Now, looking ahead in the next month and throughout the year, what should we expect? I
don't think we should expect any substantial improvements in the last month. But if we look at the trend for manufacturing in the last decade and a half, since 2000, it has actually declined since the 1980s, from over 20%, is around 10% now. And the last decade and a half, it's been around 10%. And I think we need to do a lot of work in the manufacturing sector. If we need to address unemployment in the system, if we need to address the issues of poverty and the issues of social vices generally, I think industrial sector is where we're having the biggest challenge, because although the services sector has been driving the GDP growth, agri has been growing, but industry hasn't seen the kind of growth that we need to address unemployment and poverty.
Now, your final word. To sustain this growth, what needs to be done?
I think it's a multi-dimensional approach. Of course, like I said, we're underspending. Although we're growing a lot, but we're still underspending far less than our peers all over the world. We also need to look at agri. We need also to look at security. Security is a major issue that we need to address. In the manufacturing sector, we have to look at our trade policy and how that has affected businesses in Nigeria. We also have to look at the tax policy and how friendly tax policies to medium MSMEs, to businesses, and how they can drive and ensure that we can get our factories going in the country.
David Nabena, a senior economist. Thank you for joining us on Business Express today.
Thanks for having me.
A pleasure having you.
Thank you.
It has been a week of bulls on the Nigerian Stock Exchange, and today, Wednesday, the 13th February 2019, the NSE All-Share Index depreciated by 0.15% to close at 32,413.92 basis points, while market capitalization 12.087 trillion naira. Investors exchanged 470.3 million shares valued at 4.2 billion naira at 5,858 deals. Let's have the numbers of the stocks in other parts of Africa and the rest of the world as presented by Bosede Abel.
Global stocks started the early hours of Wednesday, 13 February, mostly positive. In Africa, stocks opened a bit low. South Africa's JSE Africa Top 40 opened higher by 21.41 points to 0.04%, while Namibia Overall Index, Ghana's GSE Composite Index, Nairobi All-Share and Tunisia's TUN Index started low. European stocks were higher Wednesday amid renewed optimism the world's two largest economies might be able to resolve their long-running trade disputes. DAX appreciated 0.49%, FTSE 100 0.39%, and CAC 40 also topped 0.33%. Stocks in Asia closed higher as President Donald Trump of the United States of America said Tuesday that he was open to postponing the March 2nd deadline for tariffs if Washington and Beijing can reach a trade deal soon. Nikkei advanced 1.34%, Shanghai Composite Index 1.84%, and the Hang Seng Index also rose 1.16%. In the United States early trading, the Dow Jones Industrial Average Futures rose 108 points, indicating a positive open of more than 112 points. The S&P 500 appreciated 1.29%. Also, the Nasdaq Composite Index gained 1.46%.
Oil rises 1% on deepening OPEC supply cuts. A quick look at oil prices today and other global commodities. The Naira gained 28 kobo to exchange at 361.67 Naira to a dollar at the investors' window. We now take a look at how major currencies around the world are performing this Wednesday. That's a wrap on this edition of Business Express. Friday is another day. Keep a date with us. Be informed that all previous episodes are available on YouTube, and you can also communicate with us on Twitter, and the handle is NTA News Now. Thanks for watching. I am Amina Nushain.